Hiya traders, thanks for joining me. I'm Anthony Beardsall and I've got a couple of in-progress trades for you today, just demonstrating my gold system really. And the reason that I don't record the whole trades is because some of them last 30 minutes and I'm sure, although you are very patient with me, and I appreciate that, thank you. I'm sure you don't want to sit watching nothing for 30 minutes. Really, I can't impress on you enough that the action all happens within a very short period of time at the end of a candlestick. And the end of the candlestick has to be perfectly positioned, and then you wait for the beginning of the next candlestick. And if you get what you want, you have a trading opportunity. The majority of candlesticks, there is no trading opportunity, but as you will see, it's worthwhile waiting for the right opportunities. That's what I'm desperate to teach people. I set about this, recording videos, doing training courses, etc. I set about it with the intention of really trying to make a difference to people, to get you profitable, to get you making some capital out of your skill. And it does require learning this thing. It really does. And that's what I'm hoping to do for you. So have a look at this. This is, first of all, I'm going to show you a couple of pre-market trades that I took, opportunities, tell you why I took them, and then go into the real trading action on the live charts, but just show you a part of the trade, because by then the deal's done. The deal has already been done. I expect my trades to go into profit straight away and stay in profit with the biggest, pretty much anyway, the biggest amount of profit at the end of the candlestick, exit the candlestick. At the end, if it goes wrong and I make an idiot of myself, then I'm out early and I'm out for a loss. But the losses are so minimal, really. You've just got to get this bit right. Exit for a loss when the loss is very small and you're ready to go again. Anyway, no losses today, so I've got none to show you, unfortunately. But some winners. Let's have a look at the charts then. Right, so here are the charts for today. And this is on the Dow Industrial Average, 30 top US companies. And yeah, this is pre-market on Monday, the 10th of November. Now, I don't trade very often the short-term charts on any market pre-market, because the charges for trading tend to be higher and that wipes out quite a lot of any potential profit. But I will look at the higher time frames, and these two charts here are the 2 hours and the 30-minute charts. So here's the 2 hours, here's the 30 minutes. So I always put the charts in this type of order, with the longer term time frame on the left and the short term trading, I call it, the trading time frame, the one that I'd trade on the right, with a river of value, my faithful, loyal servant, my trading, the 8 and the 20 EMAs, providing a river of value. It's like a magnet. It pulls price towards it and then it spits it out. Sometimes it spits it out in the same direction it had been traveling in previously, and if it goes through, it could spit it out given the right conditions in the other direction. Anyway, I have this on all of my charts, and it is a loyal and faithful servant to me and my traders. And so pre-market on a Monday, now what often happens on a Monday is the market kind of catches up on where it was in the last trading week, and that's what happened here. But this is the beginning of Monday here, and you can see that there was a superb trading opportunity here as price went through the river of value, came back down and spat up. However, on this occasion here, not only was it, I think, late Friday night, very late Friday night, but also this leg here, this wick on this candlestick, is far too long to take a trade, and you would enter potentially a long trade here, but you would have your stop right down here. So the stop and entry, the difference between that is higher than the actual profit in the candlestick, and that's something that I'm always aware of and paying attention to. And so the stop is too far away, and that's because the wick is too long. I'm looking for something more like this, and this was a great opportunity first thing in the morning, and this is UK time, so this is, you know, one of the strongest US charts, and pre-market is during European trading times, so this is perfectly allowable for me given my strategy on the higher time frames. So at this time here, you've got a slight, you know, reversal. You've got a breakout here, breakout of this downtrend, moving into an uptrend, and so then you've got an uptrend leg. And when you get a strong candlestick like that, you very often get follow through, and it's the follow through that's worth trading. But you'll know that I don't take trades from up here, because I've just told you the the wick's too long, and at this stage here, it opened here, the price is way too far away from the river of value, and it's likely to get dragged back down by the vacuum. And so wait for the market to come down. You know, that's 2, 4, 6, 8, 10 hours before a trade appeared, but then it was well worth taking. And the reason for that is because this closed close to the river of value, and just on the open of this candlestick, price went down into the river of value, and that's exactly what I'm looking for. A small wick followed by, just to let you know, by now the European markets are open, so volatility is slightly higher in the US on the futures markets as well, and so I'd expect that to be a good risk based on expected reward at this time. You can see these numbers here. This is 47,100, 47,000, so 100 points between the numbers here, and that was just about the profit on this one. So a small risk of, say, 30 points, 35 points, and 100 points profit to be gained from this particular trade. And these are ones that I did take on the 30-minute chart here, which was part of this candlestick here. So everything moving up nicely. So you've got a reversal market coming back down, and then you've got a big long-tailed candlestick here with a strong body on it. And what I'm looking for then is for price to come back, kiss the 8 EMA as it did, just touch the outside of the riverbank, and then the trade shot up. So your risk is, I think on this case it was something like about 8 points, and a good reward for it as well. These are 20-point gaps, so a 40-point win. So probably 4 or 5 to 1 I think we got on this one. And then price goes up, And I call this an 8 EMA bounce trade. So price came down, bounced up here, came back down and bounced up again. And assuming all things are right, you've then got a good leg up here, and this is effectively another breakout from this downtrend here. Really strong candlesticks. I don't take these trades, potential trades here, because I've just explained that I look for the price to be around about the 8 EMA and within contact of the river of value, because things like this can happen. You don't know where on these sort of candlesticks, where would you place your stop? If you placed your stop at the bottom of it, then you get 1-to-1 reward to risk, and that's not good enough for me. If you place your stop down here, it's miles away, and so if the market reverses and starts going back down, you're in all sorts of a mess. And I don't get into a mess with my trading. It's clear and obvious and simple. So here you've got price coming back down. Is it going to bounce from the 8 EMA, from the river of value? Well, it came back down, entered the river of value, and then bounced up off the 8 EMA. And when the next candlestick puts in a tiny little wick, you've got a trade. And there you go. Price went up. Nice clean green candlestick for that one. So one candlestick, but it was 30 minutes long, and it closed on its high. Perfect. So at your entry here, you've got the close of the previous candlestick, the open of the current candlestick, you've got the low of the current candlestick, and you've got the 8 EMA all acting as support when you enter, when this candlestick goes green. And that's good confluence, and got the reward as a result of that. So here's another one, and this is halfway through the trade. Now the market's open at this stage. This is the 5-minute chart here on the left, and this is the 1 minute on the right. Same river of value, and you can see the market acting in exactly the same way to it. Here, market is dilly-dallying around. It's in a range, and then it opens. Price goes down, goes up, and a lovely green candlestick. Didn't take that one because I thought the risk was a bit long, but then look at the size of this candlestick. It was also, the price was shooting about in here, and it just didn't feel comfortable. Anyway, it would have been a good trade. This was a good trade there, and then price came up to the river of value. At this stage, I saw the same thing happening on this chart. So you've got a big strong breakout, so expect follow through. You've got the bounce taking place from the river here, and that's where I entered there. And at this stage we're down here and we're in profit, and that's good. Hope you can see that profit, because it's worth taking that. And that's not the end of the candlestick. Went down a little bit further, but that was good enough. And you can see the risk on this one was 6 points, I think 5 or 6 points, the minimum stop that the broker allowed, with 50 points between these two candlesticks, so 30-point profit, and that's 5-6 to 1 reward to risk. And that's the type of mathematical equation that I'm looking for from my trades. High probability, because my gold system judgment and signals all said that's going to bounce. And when it did start bouncing, the duck test takes place. Does it look, sound, swim like a duck? Then it's a duck. And that's what I'm looking for, and that's what happened. Now, when I entered here, it's had this little wick on it, price went down, and so you got a bit of red, and I entered there, and that's perfect, and I got a good entry that time. So around about here is where I'm looking to exit for my profits, and you're getting 7-8 to 1 reward to risk based on that. I'm hoping this is making sense to you, by the way. I'm cutting some corners because I've made lots of videos, and this is just basically proof and validating my system. It's worth doing for me as well, isn't it? Here's the next one. So this is the 30-minute chart and the 5-minute chart. So because it was near the open, I switched to a lower time frame. Price moved on, and I switched to 30 minutes and 5 minutes. And so 30-minute chart, the 5-minute chart, 30-minute chart price is below the 8 EMA and below the 20 EMA, so below the river of value. On this chart, same, and you've got a big downward move, so expect follow through. Price goes up, hits the river, rejects down, tries again, rejects down, and I enter just as price goes into red territory on this particular candlestick. And you can see at this stage we're in profit already, and this one I exited down here. Okay, so that's my gold system in operation. This should be making sense to you now. I've done lots of these videos, and there are plenty more to come, and this should be making sense to you now. You know, I've been doing this a while, so stuff that I do is, you know, is validated for me, and you follow my methodology, you should get you know, similar results once you're practiced and experienced enough. And I give a specific methodology for these trades. They're not random. You know, I didn't take any of these trades randomly, and so you can follow this methodology because I teach it you on my trading courses. And that's why, because it's got a methodology, because the methodology is blooming consistent, because although every market looks different, there are similarities between them that are demonstrating consistency. And this, as I mentioned, big downward move comes back, and this is the first pullback in a downtrend. Expect follow through. There are other signals that I give as well in the gold system that help with the confluence and for people to check to make sure it is going to bounce. Tiny little wick entered on red and down. Practice makes perfect, and this was pretty perfect. At this stage, you know, we've only got 2 to 1. Reward to risk, I think I exited on 3.5. So that's 2-3 good trades to start the day. In fact, that ended the day for me. It was only mid-morning, but that's enough. Once you've had enough, you've had enough, and it's time to do other things that you love, isn't it? Anyway, I hope that all made sense to you, and that it's giving you some really good value. That's what I'm in this for, to help people. And so if you've got any questions, then you can fill out the comments box below. I'll keep popping back to the page. Although YouTube don't send emails to me anymore, I will keep popping back to the page to answer your questions. So leave any comments you've got, or contact me directly via my website. And if you need any assistance with your trading, then I'd be delighted to help you. So thank you ever so much for joining me. I hope to see you on the next one. Subscribe to the channel if you've not already. I'll catch you later. Bye for now.